Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, October the 25th. The year's 2019. Let's talk trading, the weekly wrap up. Let's see. A trader put out a comment yesterday or today about the video yesterday, basically saying that I need to, I guess, put out a very detailed explanation. If I say the daily wick zone works, and I have to, um, basically, I guess, just really map it out. Otherwise, I'm not really doing anybody a favor. Um, but the thing is, I think I've probably put out about 10 or 12 wick zone videos. Um, I put out exit playbook videos um, with the Wickzone videos. I think I showed how if you subtract the high from the previous high on the daily, the frequency distribution. I once again I think I've detailed it pretty, you know, pretty well. I also think that, based on the fact that there are some traders who are using it and they're making money, um, I have to go back to that video that says, you can't blame the teacher all the time if the student isn't learning. I mean, part of trading is, making it work for you. Um, if you really want to, set a pending order, walk away, and then come back to a win more times than not, then you're going to have to do some experimentation. You're going to have to experiment on what you use as take profit, what you use for a stop loss, what pair or pairs you trade. Um, when I trade, I'm pretty much in front of the screen. I do have some pending orders that are like for in case there's a fat finger trade. And I'll show you what I mean in a moment, so long as I remember to show you. But no matter what, you have to have that risk management, that money management in place. And that's all I can say. The thing about trading is we're venturing into the unknown. When you place an order, you don't know what's going to happen, in the next second, the next minute, the next, hour, the next, you don't know. And so you're basically taking a shot at winning in the future because you don't know what's going to happen next. You really don't. There's no crystal ball, right? Okay, let's just take a quick scan here. All gaps have filled. I mean, I show this every week. Usually all gaps have filled. Every now and then we have a couple of stragglers that don't fill. Doesn't mean you can't make a profit. And the dollar yen here is sitting in that upper wick zone of the previous week's candle. It's obviously, unless something happens today, like a fat finger trade, um, it looks like we're going to have an inside bar. Now, fat finger trade. You see down here, what I might do is I might place a pending order way down here at 104 something, 105 area. That's 300 pips away, or over 300 pips away. But if somebody has a fat finger and like what happened here, so you place a trade somewhere here and see right there, it would have picked it up. It happened long, it took almost, what, 9 or what, somewhere around 8 months for it to happen again. But, it's those type of situations. And you can see that on other time frame charts too, not just on the weekly. But it just gives you an idea where you might want to put a trade. Okay, we're 103 pips below the open so far. The month is green, the week is green by 19 pips. It feels like a repeat of yesterday. I can't remember how many pips we were up in the day. We're just sitting right above the open. Now we're back to the open. What happened here? We broke out of the opening range for Monday. We stopped at the bottom of the opening range for the first day of the year here. So that was just a couple of pips. And not much else has happened. I mean, it's only 19 pip range. What a slow day. It must be a holiday or something. For the week, you can see here crisscrossing that weekly open right there. A nice move back up. Only 50 pip range for the entire week. Like I said, dollar yen just wasn't very active. But using that weekly buy zone, you see there was a trade there. It dipped in here, but that's a pro trade only. And you see it moved back up. Inside bar started on the inside. Only came out a couple of pips to the downside. Once again, it's slow. In fact, I'm thinking I might switch over to another pair. And I'm thinking about trying the EUR USD just because it's popular. I used to trade that in the pound a lot when I first started, but then I switched around to different pairs. But I really like dollar yen because of the way it moves, but it's not moving much, so it's time to find another pair. And you can see here, Euro NZD only 104 pips, Euro USD 36, and Euro JPY 39. And the reason I'm thinking about adding the Euro into the mix is because, see, I'm already trading um, dollar yen and I'm trading euro yen. So I might as well take the euro dollar, and then I'll be able to show you how you can look at two of the pairs and determine where the third pair just might have to go. Because remember, the euro yen is a cross between euro dollar and dollar yen. And so what'll happen is if euro dollar starts moving one direction, euro yen usually follows. That's called correlation. I'm pretty sure I did a video about that probably a couple years ago. We had the daily highest open here. Price dropped down. We just put in the daily lowest H1 lowest open here, and you can see we're moving back up. Okay, pivot point right near the open, no real bias, and you can see even the buy zone trades, were scratches or losses today because we've only had 19 pips of range and the buy zone is 20. That's an anomaly. This is one for the record books. I don't know if I can't remember the last time, and I've been trading for years. Um, Over a decade of Forex trading, I can't remember the last time I've seen a pair not actually leave the buy zone. I might have to run write an indicator and go back and see. Actually, yeah, I could do I don't have to write, I could do a range scan and, no, let me think. Yeah, I could do the frequency distribution, high minus open, how many times it was less than 10, and then open minus low, how many times it was less than 10. I don't recall it being that. Or they're both. But I think I'd have to modify the indicator to make them both be less than 10. Anyway, here we go. You can see this, the rat zones are like on top of each other because of this low range. And we took out the pivot. We already showed that here. So missed pivots, just one this month so far. Now back to that trader that was talking about the wick zone. What I'll have to do next week. Now showing price action here. What I'll have to do next week, I guess, is I'll have to break out with the frequency distributions and show you again, why and how this works most of the time. Because remember, fellow traders, these videos are for educational purposes only, and your results may differ from mine. I've been telling you guys that. And, trading is risky, very risky. I've been telling you that too. So, because of that, I'm just some guy on YouTube. If you really want, your trading investment advice, then seek it from an accredited financial professional. That way, when they lose your money or when you lose your money following their methods, their ideas, you had got your advice from an accredited financial professional, and you'll feel so much better when you lose your money, right? So, anyway, that being said, oh, I know, not supposed to laugh at your own jokes, right? But there's just too much truth in that. I will show once again the frequency distributions. If you look at the daily high minus the low, the daily high minus the previous day's high, and the previous day's low minus the low, usually there's 1 pip or more. But, there's days just like today, like the buy zone, you got triggered, but there was no profit to be made. And you see, that's one of the things in trading that's really important. See, that's why I say back testing's for birds, and you just want to look at your statistics instead, because you want to know, was there an opportunity to take profit? That's what you need to figure out. And you can do this on your own. Every time you hit that button to click into a trade, enter a trade, whether short or long, you're going to start out in the red just because of the spread. The question is, did you ever have an opportunity to take profit? Because sometimes you click that button and all you see is red. You never see green. If you stay in a trade, it might have taken you a week or a month before you actually saw green. So, and who knows what the drawdown could have been. Point being is I think most of you want to enter the trade and see green almost immediately. Of course, it's going to take a while, but I've shown you the my buying and selling indicator here, and it's based on the tick chart, which if you hit F9, you come down here and you see the highs of the ticks and the lows of the ticks. Now, the way I look at it is price can't go down unless it gets below this level. And price can't go up unless it gets above this level. In other words, the ask has to go below the peak of the bid, or the bid has to go above the valley of the ask. Because if you enter this trade right now and this never crosses here, and then it slowly keeps going down, you're not going to make any money. Because you buy the ask, you sell the bid. So you have to make sure that the bid is coming up and through this point. Because then it can't go down unless the ask goes below the bid again. So that's just a little timing trick that I've learned. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks and have a fun and safe weekend, and I'll see you back next week.